as from a top-down macro standpoint, I think the investment in AI is certainly sort of, I think, papering over sort of the what I think are cracks in the consumer, the labor market. So we're getting a very unbalanced.
Yeah.
If you look at the headline, we're growing somewhere 2.5%-3% in GDP, but it's a very unbalanced, I think, mix. I'd like to see the consumer feeling a little bit better. We've seen all the consumer sentiment numbers and all that. But I think a $1 million question I think you always get asked is, well, where's AI really? How do you monetize it? Is all this investment going to pay off? That's my biggest question.
We're doing the interview, not you. Mandeep, help us out here with the economics. Atlanta Fed GDP now is 4%. There's no one listening or watching this program who thinks it's a 4% economy. Is your world screwing up our data where we have a boom American economy, but it's a fiction?
Well, all this capex is adding to the GDP. I mean, when you think about what the hyperscalers are doing in terms of putting their free cash flow in the form of capex investments.
Can you get closer to the mic? Is this your first time in radio?
I mean, look.
Come on, man, get with it.
So I don't think, there is a reason to question the GDP number because it's driven by capex, simply because everyone sees the potential when it comes to these AI investments they are making, and the use cases are showing up. So to my mind, yes, there's a big upfront investment, but actually that's helping the GDP print as well, to your point.
Look at this, Paul. You got to get us back on the rails, Paul. Help us out here. Retail sales, September, November 25.
Oh, good.
2 days before Thanksgiving.
That's just announced. Okay,
yeah, just announced. Retail sales will come out September. They'll come out November 25th. So, Win, one of the things about AI that's just starting to creep into the discussion is, particularly as we see some layoffs, is will AI be a net negative for employment? I'm of the opinion, totally uneducated opinion, that yes, it will. That AI will either take jobs or reduce job growth. How do you?
Yeah, I know. I'm with you, Paul. It'll certainly make people more productive, but I can't see how you just see all these stories about recent college graduates from top-notch schools unable to find jobs. It's hard for me to believe that AI will be a net job creator.
Right.
I'm with you, and I'm usually not very pessimistic, but I just look around and just see the stories in the Times about the tech majors who can't find a job. I mean, it's all the entry-level jobs are being taken by AI, I believe. That's the story anyway.
I got ducky bumps. This is great. Ladies and gentlemen, worldwide and across America, Mandeep Singh and Win Thin with us here before this NVIDIA report today. Mandeep, it's just so important. The theme that Paul and I have is like clothing in the Carolinas a generation ago. We didn't do the bargain of retraining people. If we have a Mandeep Singh AI world, NVIDIA, do we have to retrain people? We broke that bargain 40 years ago. Are we going to break that bargain in your technology again?
I mean, in the world of tech, I would argue, we have been constantly retraining people. If you think of a knowledge worker, using software, whether it's Excel or any other type of productivity software, the number of features that keep coming, which you have to train yourself on to be more productive, that's been the constant theme over the last 30, 40 years. What's changed now is some of this productivity software is going to change, and the tools are going to change in a profound way in terms of AI agents or some of the things that get thrown around. But essentially, it's aimed at using more data. That's what the tools do. And, doing probably deeper work in terms of if there is a pattern in terms of how the work can be done, then AI can probably do it more efficiently. So it's more creative work, more, use of tools. But I think moving up the curve in terms of a knowledge worker, that's the kind of the new norm.
I just think of the first couple of years of my investment banking career can entirely be done by AI, doing spreadsheets, pitch books, editing.
Is that a true statement? Young IB types, they're like outmoded right now?
I would echo that sentiment as well. You don't need as many people in terms of creating a pitch book or, an IPO document and how you are capturing the data. That's where, you can do things a lot more efficiently.
But you go across every industry, though. Accounting, coding, all that. It's across. That's why it's so... I think the old timers it's so disconcerting.
You're an
to
old
feel
timer?
that. Oh, many years ago I became an old timer. Sorry.
How about on the other side of that coin? Do you think over the longer term, AI can make this economy more productive?
Well, that's the carrot that's dangling out there.
Yeah.
But we got a bunch of sticks to deal with first.
Right.
Okay. John from Singapore calls in and says, talk to Mandeep about Nvidia. Dr. Thin, sit on your hands for a moment. We got to get some business
Absolutely.
done here.
You got to go where the demand is.
Out on LinkedIn, James Banyika, ex-McKinsey, now over at Google, launches Gemini 3.
Yeah.
What does Gemini 3 mean to Nvidia? What does Gemini 3 mean in your world?
Actually, Gemini 3 is quite negative for NVIDIA in the sense that the model was entirely trained on Google's own chips. So far, NVIDIA has had a virtual monopoly for training these large language models, whether it's OpenAI, Anthropic, Meta, any of the frontier LLMs. Now Google has shown they did not have to use any NVIDIA chips for the latest version of their Gemini. So from that perspective, I do think it's a negative, but we're still in that supply-demand mismatch when it comes to these accelerator chips that NVIDIA still has a lot of customers that it can sell to.
Is there an income statement line item or a ratio at 4:30 this afternoon, whatever, that you're focused on?
Oh, absolutely. The guidance for next quarter, I mean, we know China has been a factor in terms of the incremental revenue and, the fact that they haven't been able to sell in that market. So what are they going to guide to, assuming no China revenue? And just the gigawatt data center build out. That's the big metric that everyone is focused on. How many gigawatt data centers? How many can we build next year through 2030?
Right.
That's
Brilliant.
the key metric.
John wants one more question on NVIDIA. He's on a phone from Singapore.
So talk to us about just, this is going to be a clean quarter vis-a-vis China guidance, right?
Yeah.
So this number, they really do have to beat and raise, don't they?
And which they probably will. The key metric for me is gross margins, because NVIDIA's gross margins actually went down over the past 2 quarters, and they guided to gross margins going back up to mid 70%. That is predicated on their newest architecture, Blackwell, and then going forward, Rubin. So what they're saying is they will command a premium pricing for the latest architecture, which will drive up the gross margins. So to me, if they're able to keep that guide, I think that would be a positive for this.
The former vice chairman of the Fed, thank you, Richard Clarida, for listening this morning. He says, get back to Columbia economics. That's what we're going to do right now. Dr. Thin, I look at this, and folks, I can't say this enough. After the Prime Minister of Singapore, all the internet, Jeff Yu today, out of LSE and all. The question I'm going to ask is so critically important. This goes back to Mundell. Ken Rogoff would say, this goes back to Mundell. Jacob Frenkel would say, this goes back to Mundell. How do you use currency now to judge this modern system, and including Mandeep's system? How do you use foreign exchange that you learned at Columbia?
Sure. Well, first of all, Dr. Clarida is very, very well respected. We sort of just overlapped. Never took a class with him, but he's very well respected, and nice to know that nice to hear that he listens to the show. That's a good audience to have. Currencies to me act as, is really sort of the arbiter of what's good and bad. It's sort of the shock absorber. It's the asset class that really, I think, speaks to whether the country is doing right or doing wrong. We've moved away from a system of fixed exchange rates, under which Dr. Mundell lived, to a freely floating one. I'm not a fan of pegs. I think we are in this obviously growing period of growing capital flows, where exchange rates really become really the most important asset class in my mind.
Put a bow on it, because we got to go here. Mandeep Singh's world of American exceptionalism and technology. Do you bring that right over to a resilient U.S. dollar?
Sure, that's part of it. For a while it was the Buy America, right? It was, and that's back at the beginning of this year. The problem that we ran into is that we have an administration that has explicitly wants a weaker dollar. And we've talked about this. The weaker dollar is part of this whole scheme to onshore manufacturing, make manufacturing exports more competitive. But it's a game changer. We haven't seen this weaker. We haven't seen a call for a weaker currency since Lloyd Bentsen was Treasury Secretary. So we're going back decades. So it's definitely a clash of problems. Yes, and the markets. To me, the market's always right. The market will decide who's right on this. I think the dollar is probably going to weaken.
10 seconds. Mandeep Singh, Nvidia today. Thumb up, thumb down. What do you think?
Oh, it has to be thumb up because the capex numbers have gone up for next year, and every hyperscaler is guiding to more investments for 2026. So a lot of that will trickle down to Nvidia.